With silver and gold prices hitting new highs, can the average investor still afford to stack? In this video, I'm going to dive into the cost of stacking these metals and as the prices rise, why they're still worth it. So let's break it down. Alrighty guys, well thank you for tuning in to yet another video. Today I want to talk about what it may look like when buying precious metals during a bull market. As we know, silver and gold have been in a bull market for most of the part of the year now, and at the beginning in February, silver was as low as $22 an ounce, and now as we're about a couple days into November, it is just around $34 an ounce. Now, there are many reasons for this, which we've talked about during previous videos, and regardless of what current events are taking place, it's usually the same factors that attribute to a spike in precious metals. For example, any economic factors, geopolitical issues like the war in the Middle East and the Ukraine, rising inflation, you kind of get what I'm going at here. Now, while these specific reasons can change over time, the theme of these tend to repeat itself over and over again, and that it's usually what tends to drive the metals up. Now, regardless of any current situations, I personally believe that stacking, even during price surges, are still good opportunities to buy. And it's better to be informed and to adapt rather than sit out and wait for things to cool off. Now, while that might be possible to do with silver, gold tends to hold its value a little bit better and it's a little less volatile. Let's just take a look at this example here. So when we're looking at the price of silver just over the last 30-something years, you can definitely see it's got some more insane price swings as compared to gold does. Gold is a little more stable and it doesn't have as many volatile impacts as we did see with the silver prices. So it's just something to consider, especially when you're trying to decide which one you want to hold on to more. Now, the issue with any increase in an asset like gold or silver, it becomes more expensive to purchase because of the increase in demand for these assets. I mean, a year ago, gold was just under $2,000 an ounce, and now it's reaching almost $3,000 an ounce, which is obviously going to make it more difficult to buy into, especially in an inflationary environment like we've been experiencing where your dollars can only purchase less and less over time. Now, I want to emphasize that your strategy should not change just because the prices are going up. The only thing that should ever be affected is the quantity or the amount that you may receive. Dollar cost averaging is still the best strategy to help spread out the cost over time and should be the ideal structure of your strategy, even during a bull market. Now, like I mentioned earlier with gold, a $3,000 per ounce price point can price some people out of purchasing a full 1 ounce gold coin or bar. But luckily, fractionals do exist for us to take advantage of if we're trying to at least get in. Now, you can still buy gold for cheap, but however, you will pay a higher premium. So let me show you an example of what that'll actually look like. All right, so let's just take this 1 ounce gold American Eagle, for example. Now, the $2,892.46. Subtract that from the current spot price that you see above, and you get a premium of $137.62. We scale down to the half ounce, you have to take that price and double it to get your 1 ounce price worth, which is going to be $3,085.38, bringing the premium to $330.62, which is higher than the 1 ounce coin that we saw earlier. Continuing that scaling down trend to the 1/4 ounce, it's going to have the new price of $3305.60. And you subtract that from above and you're going to be paying a $550 premium for this coin. Finally, I want to show the 1/10. This is the smallest fractional you can get of this coin here. And when you break this one down the same way, your price is going to be $3,691.30 with a premium, a crazy $936.55. So, you know, you're paying for a lot when you go down in these denominations, but sometimes when these prices become out of reach, these fractional gold coins are sometimes a good option, even though the premiums are really high. Now, even though silver is still also in a bull run, it's still relatively cheap. I mean, you can still get an ounce of silver for technically $34 an ounce. Now, depending on which one you get, it might be a little bit higher than that, but it's still within reach than compared to gold. 35, let's say even $40 to $50 is still something someone can throw in once a month instead of going out for dinner or doing something extravagant that they normally would do. So here is what I believe everyone should do, even if the prices rise. If you're a new stacker, just get involved in small purchases like silver. Find out what you like and what you don't like. No one should panic buy and submit to the FOMO mentality like I did in the beginning. I think everyone should set aside a dollar amount, a specific dollar amount that you determine would be good for you, because everyone's situation is different. And just dollar cost average that amount every single time. Eventually, you'll build your stack over time. And just remember, this is a long-term, long-focus type of game, not a short, get-rich-quick type of strategy. Now, when it comes to, for myself, what I do is, as you guys probably have heard, I do dollar cost average. But when it comes to actually deciding what I want to purchase, I completely base that based off of whatever the premiums are at its time and whatever the gold silver ratio is at that time of the moment in which I'm actually going to purchase it. Now, if you guys haven't seen that video, it's about 2 videos back from this one. I'm going to go ahead and put that in the top right for you guys to see, so you guys can kind of get a better, more detailed explanation on that, because that's not really what this video is going to be about. So if you want to see what I mean by all that, go ahead and check that video out. It explains everything about my strategy and how I specifically buy things and what I actually look for. Well, that's going to do it for this video, guys. Let me know what you think in the comment section down below. Tell me about your strategies and what you're doing currently with these prices as they're increasing. Has your strategy changed at all? Or are you going to be doing anything different from what you normally do? Let me know in the comments down below, and I will see you guys in the next one. Bye-bye, guys.